Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about EXLSERVICE Holdings INC quarterly report. EXLSERVICE Holdings Inc. provides a wide range of businesses and services across various industries. Some of its key offerings include digital operations and solutions, analytics-driven services such as claims processing, policy research, and underwriting support, customer service using digital technology, artificial intelligence, and machine learning subrogation services through the SuberSource software platform, healthcare services, including care management, utilization management, and disease management, financial planning and analysis, management reporting, and forecasting services, reservations, customer and fulfillment services, freight billing, collections, claims management, and supply chain management services, residential mortgage lending, retail banking, and commercial banking services, investment management and trust verification services, merchandising, pricing, and demand forecasting services. These services are offered across various industries, including insurance, healthcare, banking, capital markets, and diversified industries. The recent drop in EXLSERVICE Holdings Inc. EXLS stock price can be attributed to a combination of factors. A general market correction and economic slowdown contributed significantly, with the company's shares declining by 16% in March 2025 due to lower-than-estimated GDP growth and decreased ISM manufacturing PMI. Analyst downgrades also played a role, with 4 analysts lowering their ratings for EXLS stock as of April 2024. Additionally, concerns over valuation were raised, citing the company's high-priced earnings P/E ratio compared to its industry median. Furthermore, EXLSERVICE Holdings experienced a decline in comprehensive income in Q3 2025 due to unrealized losses on cash flow hedges and currency translation adjustments. This highlights the company's exposure to broader economic uncertainty and market volatility. Lastly, EXLS underperformed the broader market, losing approximately 6.6% since the beginning of the year, while the S&P 500 gained 16.9%. These factors collectively contributed to the stock's modest decline of -7.47% over the past year. The primary drivers of revenue growth or decline are multifaceted. On one hand, revenue growth is driven by expansion into existing client segments, new client wins, and increased revenues in various sectors such as insurance, banking, and capital markets. Additionally, investments in digital capabilities, technology applications, and product development have contributed to growth. Furthermore, increases in cash earnings and additions to facilities and infrastructure have also boosted revenue. On the other hand, revenue decline is primarily attributed to a decrease in gross margin due to lower revenues in certain existing clients, particularly in the healthcare and life sciences segment. Foreign exchange losses in international markets have also contributed to revenue decline. These factors highlight the complexities of revenue growth and decline, influenced by both internal investments and external market conditions. Net income and profit margins experience growth. The financial performance of a company has shown significant improvement over the past year. Net income increased by 29% from $147,625,000 in 2024 to $190,773,000 in 2025, with a notable 9.7% growth rate. This increase can be attributed to higher revenues and gross margins, as well as a decrease in operating expenses. Profit margins have also seen an upward trend, with the gross profit margin rising to 38.2% from 37.6%, and the operating profit margin increasing to 23.1% from 20.3%. The effective tax rate has decreased from 22.6% to 20.3%. The company's adoption of alternative pricing models, such as nonlinear pricing, has contributed to its improved financial performance. Additionally, a decrease in operating expenses, including a 10% reduction in depreciation and amortization expense, has also played a significant role. Overall, the company's net income and profit margins have experienced substantial growth due to a combination of increased revenues, higher gross margins, reduced operating expenses, and strategic pricing model changes. The company's financial performance indicates a positive trend in its operating cash flow. The data from both page 15 and page 70 show that the net cash provided by operating activities has increased significantly, from $163,179 in 2024 to $233,336 in 2025. This substantial increase suggests that the company is generating sufficient cash from its core operations to cover its expenses and invest in growth initiatives. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level has increased significantly over the past period. Total liabilities rose by $66,336, and long-term borrowings increased by $66,336 as well. The total revolving credit facility also saw a substantial increase from $300,000 to $500,000. Conversely, interest expenses have decreased across various periods, including a 13% drop in 2025 compared to 2024, and a decrease of $603. The company's financial performance across various segments and regions has been mixed. The insurance, healthcare and life sciences, and banking, capital markets and diversified industry segments have performed well, with growth rates of $24,691, $35,802, and $32,086 respectively. In contrast, the international growth market segment has underperformed, with a growth rate of only $17,865. Geographically, North America has been a standout performer, with a growth rate of $122,985. The rest of world region has also performed well, with a growth rate of $32,086. However, the United Kingdom and Europe region has struggled, with a growth rate of only $24,691. Management's outlook on company strategy. The company's management emphasizes a multifaceted strategy to drive growth and expansion. Key initiatives include leveraging new technologies like AI and data analytics to transform business operations, expanding into international markets through strategic acquisitions and market formation, and transitioning to alternative pricing models. The company also plans to invest in digital capabilities and technology to enhance operational efficiency and gross margin increases. With a focus on driving higher revenues and operational efficiencies, management expects significant growth across all segments, supported by investments in AI and technology. The company's financial summary reveals that it has engaged in share buybacks. Specifically, detailed information on share repurchases can be found on page 44, which outlines specific amounts and prices. Additionally, page 71 confirms this activity, with a mention of $23 million spent under share repurchase programs. That concludes the financial summary for EXLSERVICE Holdings INC. Feel free to comment below, and I will be happy to answer them when possible.